You're watching the Blockchain Interviews, hosted by Dan Weiskopf. Each episode features interviews with leading industry experts so that viewers can have a deeper understanding of today's quickly evolving blockchain marketplace.
Welcome back, everyone, to the Blockchain Interview Series. My name is Dan Weiskopf, and today we are joined by a true transformer of business, best known perhaps as the prophet, the fixer, or simply just Marcus. In many ways, Marcus Lemonis, as himself, is a gift to small business, and without a doubt, an out-of-box thinker whose accessibility on social media leads him to inspire entrepreneurship across the board. Okay, yes, folks, I can say it. I'm a fan, okay? So when I read of his interest in Beyond, formerly Overstock, I was extremely excited given our investment in the company. Marcus, thanks so much for joining us today, and thanks for all your energy and commitment to the business and, come on board.
Well, I have two comments before we get started. The first is, I usually tell people it's just Marcus, like Madonna. People are like, no, Madonna's totally whacked out now. The second thing is, for your listeners, let's have the truth. When you heard the news, you were a little freaked out that all of a sudden I was going to be over there in an exciting way. I remember where I was when we talked on the phone. I was walking in New York City. And I remember exactly that I was giving you my play-by-play of how it was all going to happen. And if you remember, there was a lot of drama.
Oh, there was a lot of drama. Absolutely.
It would have been a great episode of The Prophet.
And by the way, it was 8 o'clock in the morning. I sent you a DM at 8 o'clock in the morning saying, hey, can we talk? And within 2 minutes, you came back. I said, sure. And I never expected that. And by the way, it's kind of the power of social media that I think is so incredibly important these days.
Well, the truth be told, my ultimate arrival at Beyond was largely done through social media. That's actually how I learned a lot of things. That's how I did a lot of research on how people were feeling about things. That's how I looked at how the company communicated with the marketplace or didn't communicate. That's how I got a vibe of how investors were feeling, both good and bad. It gave me a pretty free look at what was happening. And so you take the public company financials and you take a sample size of what you'll see on social, and you can get a pretty good idea of how people are feeling.
And you still can. And I think that is, the power today of the way that people invest. And I think it's important. Now, so before we get ahead of ourselves, I just want to ask everybody, or at least tell everybody, here's what I hope they learn about as a result of this interview. One, you got to trust in the process, as you always say, right? And trusting the process means that it's about investing in people, the quality of product, and it's the consistency of the customer experience. You're going to definitely expand on that, but I think that's an important takeaway message that I want our listeners to adhere to. And then, it's only been 4 to 6 months that
Not
you've
even
involved. Not even? Okay, fine.
Yeah.
I don't know how long you started doing the research.
I do. This is my 97th day.
Oh, God. Okay, don't scare us.
I'm not keeping score, in case you were wondering. I'm not keeping score.
And then, okay, I also wanted to bring up that you're not afraid to take risks, because I think that this was a huge risk for you in that it's a major undertaking. And, I look forward to the road ahead, and I'm sure it's going to be exciting. So,
Dan, let me address the risk thing, because I know you have your format of your show, but I need you to trust my process for 45 minutes. Okay. The risk thing is more reputational risk, which is that it is financial risk. And, there's a lot of people that have been very critical in my circles, have been very critical about the way that I have structured this whole concept. not taking any cash compensation as a board member, acting more as the principal executive in the business, which I am acting as a principal executive in the business, and dealing with the business on a day-to-day basis, not taking any RSUs, which is a guaranteed form of payment, not taking any of those things, and rather putting myself in the situation where I believe a lot of current shareholders and former shareholders, or shareholders that have bought recently and ones that have bought previously, that have had it for a while, putting them in that same boat. Because let's not have any misconceptions. A lot of people have owned this stock on a roller coaster ride, all the way up to $80 and down and up and all over the place. And there are people that have high-level bases based on those different entry points. And I take very seriously, and I told the management team this, that we're not going to put ourselves on an elevator that is materially different from how, Grandma Moses bought the share in the offering that happened not so long ago. And so that to me is a really important point. As I look at risk, I bought some shares. I'm going to hopefully have permission to buy some more shares. The price today doesn't scare me at all. But understanding where the company's going is not only important to me, but should be very, very important, particularly from a company that did an awful job. I mean, couldn't be any worse of communicating its ideas, its strategy to the general market. And furthermore, I think looked at, rather than looking at shareholders as what they are, which is owners of the business, who have put board of directors in there as proxies of their interest, who then rely on that board to put management in place, who also will protect their interest. It's a different strategy today, for sure.
Well, I think to your point, you're gonna grow. At least this is what I'm thinking, in a profitable way that's consistent. That wasn't the case before. In 24, in the fourth quarter, 24, 25, come on, help me out on that.
Well, I'm in a bit of a challenge because I don't like being involved in businesses that don't make money.
That's all I mean. That's all I mean.
But this particular business needs to be rebuilt. And it's very difficult to hit a revenue target, hit profitability, and achieve all the other things we want at the same time. And I'm dancing on the edge of a razor blade, knowing that reputationally that's what people are expecting. So it's been tricky. And I'm in this moment in time, I'm more about getting Overstock launched, getting the platform right. It's our first Shopify headless model ever. We're on a homegrown system. Historically, that's what Overstock was on, and then it turned that site over to Bed Bath. And then now we're starting Overstock from scratch. We launched backyard.com. We're about to launch kids and baby and college living and our table and Zulily and a variety of things. And so right now we're also trying to find our sea legs, or what's the right tech stack that ultimately works for the business. And when we look at the headless options that are out there, Shopify is one, and it's an excellent one. But I don't see us putting all of our eggs in one basket, not because I don't love Shopify, but because I want to see what are the best practices, where's the support metrics, what are the algorithms function best with, what's the best way to display inventory and do other things on the site. So 2024 probably should have been described as a rebuilding year. But I thought I'd put my reputation on the line and call it something more than that.
Yeah. Well, to be clear, I wasn't trying to pin you down on.
Oh yeah, you were.
On near term.
Yeah,
no,
you were.
No, I mean, anyway. So talk to us generally about how you brought in Chandra Holt, because I think culture matters a lot to you. And you kind of set up a little bit of a horse race between two different businesses and two different CEOs as a result of bringing somebody outside into.
Yeah. Part of the reason that I brought Chandra in is I really felt like she would bring a different dynamic to the table. And the historical dynamic that existed in Salt Lake City with Jonathan wasn't one that I really wanted culturally to breed anymore. It was it's kind of like a hierarchical structure that has a bit of a kiss the ring environment to it. That's actually how I met Jonathan the first time. And I wanted to flatten out the organization, and I wanted to create layers of equality across different levels of management, because the number of things that I was going to ask them to take on in a very short period of time, that existing management team couldn't have done it. Chandra is familiar with both asset light to a degree, but largely e-commerce with lots of distribution centers at Walmart. And then previously at Target, she was sourcing product for a brick and mortar store. So her skill set is very strong as it relates to strategy and organizational ideas and technology ideas. But to be purely in an e-commerce business that is asset light, whether she would admit it or not, is a learning curve. It's been a learning curve for me to understand that you're relying on other people to control that customer experience, and you're relying on other people to say they have it in stock, and you hope they do, because it puts the business in a really precarious position. I think Chandra has been great because she's allowed Dave, who has been an absolute superstar as well, to focus primarily on getting Overstock relaunched. And we went out and bought the Zulily asset, getting that relaunched. A number of people warned me that putting Dave and Chandra in that role together would become the Hunger Games. And there have been days where I had seen that happen. And there's been days when that's happened, I've kind of allowed it to play out and just to see how they interact. And then know that at the end of the day, while they're both division CEOs, somebody still has to set the direction on a daily basis. And I know I have the ability to do that. So that was comforting for me as well. But she's been great.
Interesting. Yeah. So how do you allocate resources between the two different divisions then? Because as you pointed out, they're asset light, but their needs are different.
Well, the one thing that people, I don't think, give the company enough credit for, and I'm surprised that it's not a larger part of the value discussion around the business, is this unbelievable proprietary system called Supplier Oasis. And what it is what it sounds like. It's a oasis of inventory SKUs, both short and long SKUs, from different vendors around the country and world, by that matter, that all sit in one pot. And now the question is, how do you use the different websites to determine category segmentation and price segmentation? Because when we launched Bed Bath & Beyond in its most recent form that exists today, all they really did was take the historical Overstock categories, minus apparel, minus jewelry, which they abandoned, which was a terrible mistake, and then added all the soft goods and the small appliances. And so Bed Bath & Beyond and Overstock had a baby. And you, in my opinion, you left out some of the secret sauce, which is that fast-moving, high-dollar, high-transaction product that came with good margins. And so we've added all that back. And the challenge really today is, what do you put where? We know that Bed Bath & Beyond should have all the bedroom stuff, all the kitchen stuff, and all the bathroom stuff. And principally, that's what it should have. Overstock is going to have furniture, jewelry, apparel, footwear, very, very, very small amount of housewares, because that wasn't a big category for them historically. And joking, but not joking, I promise you, as God is my witness, at some point we will sell things like cars. I know they tried it once before, but they didn't try it with me.
They're not going to sell RVs, though, right?
No.
Okay. I just.
No.
How do you compare the two businesses that you're responsible for? Because they're very, very different, maybe to some degree opposite.
They're exact opposites. However, what I've learned over the years with Camping World has played out tremendously at Beyond, particularly with understanding the Good Sam file and all the products and services that are there. But on the flip side, and getting the folks at Camping World to understand that asset light actually works, I think ultimately will help that business as well. So for me, it's like I get to be in two universities at the exact same time and share that knowledge with both businesses. I've actually had managers at least share ideas with each other, share resources with each other, share cost savings ideas with each other, as every business should share their ideas. But they are very different. They are very different.
Yeah, I mean, I was watching an interview that you did, and the Camping World, you actually look at as also a real estate play.
Yeah, I mean, we use real estate as a mechanism to park cash because it's a good use of it. I can get an 8-9% return on it as opposed to doing a sale leaseback at an 8% cap rate. So I look at it a little differently. I think the difference with Camping World is right. It's a 20% plus market share dominator, and Beyond is not that. And so when you look at it's been the hardest part for me when I look at the recreational stack. We're always number one by a lot. And when I go over to the Beyond world, we're not even in the top 10. And so for me, my biggest challenge is how do I get from where Camping World was 15 years ago, 20 years ago, it didn't exist, to number one? How do I take that same mentality, that same work ethic, the same long days, and that same calculated risk-taking to get beyond, maybe not to number one, maybe not even to number 5, but to be big enough to matter, and more importantly, to give us a really good return on capital.
Yeah, it was interesting how we started off on the conversation about some people may have criticized you in the context of, I guess, your compensation package. But as I understand the compensation package is if you aren't paid well, that probably means the stock did not do well. If you are paid well, I'm going to be a very, very happy camper. All pun intended.
Right. That strategy is not too dissimilar from what I have at Camping World. So I take no cash compensation at this point in that business, but I don't have any options or RSUs there either, which is a little weird. People definitely scratch their head and look at me and say, like, you're literally working for free. But I don't necessarily see it that way. In the case of Beyond, there were 3 principal problems that I had. One, I thought the corporate governance was not as good as it could have been. Number 2, I thought that the goal alignment between the people that work there and the people that invest their money there, they were on different elevators. And number 3, I like to have a rabbit to chase. And when I joined the company, I think the stock was like $13 or $14 or something along those lines. It wasn't doing well. Today, it's doing a little better. I think it's in the mid 30s, plus or minus. And when I made sort of the first proposal to the board, they looked at me like I was nuts. I said, I don't want any cash. I just want to do it this way. My strike prices are $45, $50, and $60. And even though you're approving it as a board, it will not go into effect until the shareholders vote for it. And if the shareholders vote it down, that means that I'm out. By the way, that's like in a month.
Yeah, I know. May 21st.
But it literally means but it literally means I'm out. I can't work there.
Oh, okay.
I know.
Well,
so it's a big risk for me because I've invested, a good amount of time thus far. It'll have been 5 months by the time we get there. A lot of changes, a lot of acquisitions, but I want shareholders to really feel like they control their own destiny. I've never been involved in a business where people that own the business can't at least have an opinion.
Yeah.
And it hasn't been that way. So I wanted to deliberately tell the shareholders, this is how I see the world. This is what my request is. Yes, it's out of the money. Yes, there's a risk that I never could make any money. But Dan, there's another way that I could not make any money. And the stock could do just fine. I decided in December of 2023 to strongly encourage the board to declassify, which means that they're up for election every single year. And historically, that was a 3-year election. And I felt like if we were really going to make moves and changes in the business, we needed to start from within. So I could do a year's worth of work. The stock could be $1 away or even at the dollar amount to be in the money in tranche 1 or tranche 2. And I could be unelected. That's it. Then it's over.
Well, talk to me. I want to change the subject a little bit because I don't want to think bad thoughts today.
No, but I mean, look, but no, you shouldn't think bad, Dan, because when managers and board members challenged me on my thesis, I said, listen, if we're doing a good job and we're performing and we're communicating and we're doing the things we say we're going to do, even when we miss something or make a mistake, as long as we own it and we're transparent, people will keep you around. And I like this idea of everybody always feeling that somebody has the right to say, go home. I feel like people work harder.
Yeah, but in order for you to achieve your ambitious goals, we'll say $45, $60 a share, you've got to deliver on some very serious revenue growth.
I know.
So, that's good, and anyway, so let me switch up the conversation a little bit between public markets and private markets. You seem to spend a lot of time, at least in the past, on private markets, small deals, small business. Is that something you're going to continue with? And if so, how is it actually scalable for you?
It's really a life passion for me, to be totally honest. It's not an economic, proposition. And while there's economics involved, they usually aren't great. But for me, I always believed that I needed to have something that I would build, whatever legacy I was trying to build, that I would build it on. I needed a foundation. And being the CEO of a public company isn't something that is going to, change my life or change other people's lives. And the small business route and that smaller deal routes were always done because most people won't do them. And I really felt like if I dedicated my life to that, and I still do it today, I dedicated my life to that, if I drop dead at some point, and I'm 100 years old or whenever it is, there's somebody be like, oh, that was that small business guy. And that was something that I really, really wanted to build as a legacy. I am going to be going back into production again on television here probably in the next 5-6 months, and largely do it because I really believe that business owner needs that opportunity to get educated and get that opportunity, and people need to feel good about themselves again or bad about themselves again. But it's not something that I ever see stopping. It's really part of who I am and what my DNA is. And running 2 other big public companies is my primary objective. Like that's what I have to do to keep the roof over my head, feed my family, and do all the things I want to do. But some people are painters and some people drink wine and some people have kids. I just like that small business is my thing. And it's just who I am.
Well, I mean, if Beyond works out the way we all hope, you can fund a lot of small business.
Well, it will work out. And my goal, because I've done the math, and the way that I structured the deal there, my goal was to try to make more than $50 million, 50. And you can do the math because everybody can see what it is. So I'm going to be very public about saying my goal is to make $50 million. I'm going to keep saying it over and over again. And people will have to put their spreadsheet together to understand what would the stock have to be for him to make $50 million.
It's not hard to figure out.
No, but it's better than me saying the stock price and going to jail. So I do want to make $50 million. And it is also my plan for full disclosure, to continue to invest at the rate that I have for the last 10 years in small businesses. But as my wife, who's recently my wife since 2018, has told me, you can invest in all those things like with the money you make from something else. We need to not burn all this cash just on that. And she has been a supporter of it. Conceptually, practically speaking, she hates it. She hates it. She says the amount of time you spend on it is just insane.
Oh, I'm sure. I can imagine the conversations. So changing up the conversation a little bit, when you came in, you thought you probably knew a lot about what was happening with Beyond. Talk to us a little bit about some of the positive surprises. We know there's some negative surprises.
Yeah,
but
there's more positive than negative. Way more positive than negative. I think that the primary positive has really been around the surprise of the talent that was there.
Yes.
And that I had been hearing that the talent was no good in the company. And that was just nonsense. And a lot of times, as you know, talent is a function of their leadership. And if people aren't put in the right position at the right time, with the right direction, with the right incentives, you're going to get average talent. But if you line people up and you work side by side with them and you give them an incentive plan that aligns with yours, you'll find that people will surprise you. I recently promoted a young lady by the name of Carlisha, who had been the chief product manager. She's now the chief customer officer and a Section 16 officer. Dave Nielsen, who had been in and out of the company over a couple of decades, totally undervalued and underutilized. I mean, totally undervalued and underutilized. And that just scratches the surface. And so I've been shocked by the level of talent. I've also been surprised by how hungry vendors are to help this company succeed. I've been very surprised by that. And typically you would expect vendors to just be out for them. And the volumes of vendors that are, of course, they're concerned about their own revenue. And I respect that. But they're doing things and helping in ways that they don't have to. And it's not just around money. It's around product training. It's around spending money to develop other things. It's about private labeling. It's about a variety of things. And I've been surprised by that. So I've been candidly more surprised by the positive things that I didn't know existed. And they have really, really overwhelmingly dwarfed the number of negative things that we all knew going in. Like we all knew what the problems were. They were visible from a mile away.
After the conference call, when I had my follow-up call with Adriana, she almost looked liberated. She was really excited, I think, about having more responsibility and more controls, and almost like she could speak her mind more. I was fascinated by that. So anyway, fast forward a little bit. Talk to us a little bit about your strategies around technology. Will I want to hear it or not? Your straight talk is helpful.
Yeah.
Both, about Medici as well as how you use technology on the platform.
Well, let's rank those with the subjects that I like the least to the subjects I like the most. It will start with the Medici assets that are out there. And the reason I say I like them the least isn't because I'm not excited by the potential value that they could create. It's not that I don't believe that a number of the companies are doing all they can to improve and succeed and contribute to society. Lewis, who's the founder and primary owner of GrainChain, has been just a delight to deal with. And his understanding of where his company can fill white space in the global economy, not the U.S. economy, has been fascinating to me. And, what I learned through the process, and I tried to describe this to him in a very financial way, But GrainChain is to the lending community, between the lending community and the farmer, what Moody's and S&P is to the public debt market in terms of doing the diligence and collecting and contrasting the information and scaling it and exposing it in a way where a casual or sophisticated lender or investor can draw a conclusion from a rating system. And that rating system has all those inputs. GrainChain is providing, obviously not the same construct, but a similar principal validation between the yields and all the things that can make farmers better, give lenders comfort, show the efficiencies, show the yields of certain crops. And I have never, ever seen anything like that in my entire life. And I've had good dialogue with Lewis saying like, okay, where else can this concept live? Mm-hmm. Can it live in the supply chain? Can it live in manufacturing? Where else could it live? Because it truly is just measuring out production and yield and looking at the inefficiencies of things. And so he has been an absolute shining star. My expectations for that business are very high. In terms of dollar high, I have no idea, because I've never seen assets trade at multiples like I've seen in that space. Like I'm a good old fashioned retail guy. And when I see businesses getting 20-time multiples that lose money, it's like a scratcher of a head for me. And then businesses that have been around for 40 years and make great money get a 5-time multiple. It's like, okay, that's just a new education for me. It's a whole nother stratosphere when you get into some of these other assets, whether that's GrainChain or T0 or some of the other things that are in there. You know, it's been interesting. The T0 piece for me, I am working as hard as I can to be optimistic. But optimism requires information, and information requires transparency, and transparency requires no bullshit. And my tolerance for bullshit is 0. And my frustration level, and I've been very public about it. I'll say it again today. I'll say it on a public call. My frustration with Pelion couldn't be any higher. That this company gets paid $2.5 million a year to manage a portfolio that should never have been taken out of the company. Never taken out of the company. To then give up 30% of the upside. And you don't have to be a rocket scientist to understand that year after year after year, 3 years running, since their involvement, that asset's been written down, and written down some more. So while I don't hold them directly accountable for the performance of those businesses, I hold them directly accountable for the information, the presentation, and the accountability of those businesses coming back to its owner. We don't have that kind of relationship. I would say at this point, the relationship between the company and Pelion, I would say it's non-existent. It's non-existent. And I'm going to continue to put pressure on them from whatever mechanism I can to right-size a relationship that, in my opinion, as they have told me in emails and in phone calls, everything was done above board and the documents are clear. And when people say things like that to me, they're feeling the need to tell me things, almost like they're lawyering up, like, oh, the documents are clear and we're going to live by the document. We can live by the document, but then everybody's going to live by the document. And performance may not be in the document, but if you're in the business of raising capital from third parties, and that is your business, and you get paid a management fee to do it, I think all potential and current investors want to understand how that money's managed. Right now, I can't tell you.
So does that mean we're not going to have a Pelion Medici Mayday?
Not that I've heard about. I mean, nobody's reached out to me to tell me about any Mayday. The only Mayday the Pelion may be needing is over the next several months when I continue to put pressure on them to provide transparent, open information, to hold these companies accountable for the money that they receive, and more importantly, to help those companies with the resources and the skills and the training to deliver better results. I didn't think the company was hiring a babysitter. But right now, it's paying a babysitter, and I can't find my kid in the house.
Yeah.
And I'm a really nice guy until I'm not.
No, I get it. I totally get it. Talk to us a little bit further about the deal that you signed with X, because I think social media is a strength of yours, and that it would be helpful to have some clarity on that.
Well, I think the key is that I was looking for ways for the company to communicate through technology to consumers in a very different way. And the company historically has used traditional performance marketing as its gateway drug. And it would spend money and get a return. And they would call it a ROAS. It's a return on ad spend. And they would spend money and spend money and spend money and get a return. And at the end of the day, it's good in the early years when everybody else isn't as sophisticated. But as people get more sophisticated and you're not getting more sophisticated at the same time, it becomes a fait accompli if you don't do something different. And so something different for me is I like to meet consumers where they live. And I like to not be so literal with them in terms of how I build affinity with them. And the way that you build affinity with people is you build trust, and you build trust over multiple transactions. And, there's this theory that if you find a customer for the first time, there's a 40% likelihood they're going to come back. And then when they make their second purchase, there's a 40% likelihood that they're going to come back. So you've already lessened the pool. But if they make that third purchase, there's a 70% likelihood they're going to come back and stay. So the company's challenge in every single case is how do you get to transaction 1? And then how do you actually have the retention to get to transaction 3? That's the most important thing. And if you just use the President's Day sale and up to 70% off, then you've essentially commoditized your business in a way that all you are is a pusher of goods. And anybody can get into the game and give stuff away and spend a bunch of money to do it. So I wanted to develop a different strategy that was around content. And content for me has always been the greatest mechanism of communicating. And content for me is around storytelling. And so we hear about performance marketing, and we hear less today than we ever have around funnel marketing, which is identifying people who are interested in something and then taking them down the funnel with additional information until they reach a level to convert and transact. And so I use content and the creation of content. Television shows is really the primary use of it. And so we're in the development of 8 to 10 full-on television series that will be broken down into 30-second, 60-second, 90-second, etc. And so the deal with X had 3 principal goals. 1, meet consumers where you know they are, whether you like what happens there or not, whether you like the owner's political or whatever his positions are. Like, I really don't care. I'll use Michael Jordan's old adage. People would say to him, who are you voting for? He said, everybody buys sneakers. So I'm voting for everybody. Same issue for me. And there were a lot of people inside the building, at the company, at Overstock, at Bed Bath, whatever we call the place now, beyond, who said to me that doing a deal with X was either going to cause significant damage to our brand or people were going to quit because they didn't like what was happening on the platform. And it is true, and X has acknowledged it, that the platform, this free speech platform, is difficult to regulate in certain cases, and that there could be bad actors out there, and that ads could get served to the wrong place, and there could be mistakes, and things like that could happen. No different than a typo in a newspaper. No different than somebody on air reporting something that they thought was correct because the producer told them, and they were wrong. There's 6 dead people, not 60. And so I'm forgiving in that regard. And I also rely on people getting good information. So the program is use them to communicate with consumers, to communicate to consumers, use them to deliver short form content and some long form content, and then use them to take over marketplaces on specific days. Labor Day, 4th of July, Memorial Day, right? All those big shopping holidays where you own the platform for that day. Is it a risk? Yes. Is it a definite guarantee that it's going to work? I have no idea. But the amount of money that both companies, X and us, are investing in how to deliver that content and how to perfect shopping ultimately and how to do all those things, it's innovative and it's different. And I'd prefer to be a first mover than a follower.
Yeah. You haven't disclosed any of the details behind the transaction.
No, because it's you'll find with me the details have the added benefit of being damaging when competitors are paying attention. And I don't necessarily like to tell people what my plays are going to be for the Super Bowl.
I got it. Totally.
Even though the fans really want to know what the playbook's going to be, the fans have to trust that the people that are running the business are protecting the information because it's proprietary to the company. Just like you don't have Coca-Cola giving out like their recipe to Coke.
Totally get it. And so my last question is because we're both ex-users, right? And big believers in it.
Yeah.
I saw on X that somebody thought that there was going to be a driverless EV RV. You believe it?
Well, it was on April 1st. It was April Fool's Day. And what was amazing to me, and I told the team this would happen, what was amazing to me were the very 50-50 split between people who were genuinely worried that this was going to happen and other people who were like, that's the dumbest thing, and we know it's April Fool's. And you would think that people in the stream would like read each other's things. People, I got emails about it. This is going to be dangerous. You're going to kill people on the highway. I was just like, it was an April Fool's joke.
Oh, I know.
But it worked.
It worked. It caught attention. Maybe a bunch of people bought some more RVs.
So, Dan, there's one thing that I do want to tell you. I know that we're running out of time here, but there's one thing that I do want to lay out for people. There's been a lot of criticism about these lofty goals that have been put out there on the revenue side. And of me, like analysts have said you're nuts, shareholders have said you're nuts. And my response to them is, at some point in business, you have to draw a line in the sand somewhere. And in most cases, that line is internal, so that everybody in the building understands what we're marching towards. And if you get to 2.1, you've exceeded that goal. If you get to 1.9, you have missed that goal. And the missing of the goal doesn't mean that the world is over, everybody's fired, because if you miss the goal, even if you only get to 1.8, you still have a 21% increase in business year over year. But I knew that I needed to draw that line in the sand. Draw the line in the sand around SG&A. Draw the line in the sand around margin expectations. Draw the line in the sand around revenue. And I knew that the reputational risk that I would take on would be meaningful enough to me and hopefully to other people, where we just did everything we could to attempt to get there. Am I confident that we're going to get there? Yes. Is there a possibility that we exceed it? Yes. Is there a possibility we miss it? Yes. But I don't like this idea that companies take this very conservative approach, particularly when you're burning money and you're trying to justify why you're doing it, that you set these easy goals so that you can pat yourself on the back. It's what motivated me to do the Zulily deal. Big time. Was a $4.5 million transaction of a business that did $900 million last year. It's what motivated me to put one of our non-core intellectual property assets that hadn't been used in 5 years on the block to sell. And I sold it for more than twice as much as I bought Zulily for. So there's a lot of interesting things out there that we're doing. And I know 100% that putting a $2 billion revenue target out there was like putting a giant target on my giant forehead. I knew that. But at what point do you decide to give everybody something to shoot for? You have to. And so,
No, I thought it was great.
Well, it's great if you are comfortable with it. But if you're not comfortable with it, it's not great for people. Because when you look at the sell side analysts, I don't think very many of them even have me much above 1,850. And I'm not arguing with them. And if I end up, what's interesting to me is if I end up beating every one of the quarters or matching the quarters and getting to 1,851,000,000, which I think was like around the consensus, I don't even have in front of me, so don't quote me on any of it, that you would be a hero in most cases, but if you miss 2 billion, people are going to punish you. And somebody said to me, you're going to get severely punished if you miss 2 billion. And my response was, I've been severely punished many times, and I always figure out how to come back. I learn from what I made a mistake on. I learn from what I missed. I'll never let it happen again, but I'm going to die trying. And whatever the consequences are, they are.
So, how do you factor acquisitions into?
I had them in my head. I had them in my head the whole time. Like I knew I was going to relaunch Overstock, and I had known about the Zulily deal when I set the goal out there. Did I know I was going to be able to get the deal done? No. Did I think I could? Yeah. Did I think if I couldn't, I'd have to find something else? Yeah. Am I still looking for other stuff? Yeah. Yes. I am, because I have to. And when you can tell a shareholder that you bought a business at $900 million, it comes with no debt, no liabilities, no inventory, no leases, no nothing, and you paid $4.5 million for it, and the website's already ready to go, people are like, okay, well, that one's good. That was a good job. And all you need is like 10 or 12 good jobs. And then all of a sudden people will believe you. So
I get it.
It's a challenge. Overstock is launched. It'll be a slow growth because it's starting from a dead stop. There's no domain authority at all with Overstock. We have to start from zero. Zulily has domain authority. I actually think that Zulily could outpace Overstock in the early days while Overstock is getting going.
Does Dave know that?
I'm not telling them that. But we don't have it set up that way. To be honest, Dan, it's not set up like Dave is reliant on that. The two of them have the exact same pay plan built on the enterprise. Because I didn't really, all kidding aside, I didn't want to set up a situation where you're going to take a middle manager and you're going to spread them in two ways, particularly on the tech team, where you're telling a developer, work here, do this, do that, and putting them in the middle of that car wash. You can't do that. You can't.
When somebody goes on either of the sites or any of your sites, can you direct advertisement to them or grab the information of where they went and then follow up with them?
Yeah, so it's basically redirecting, retargeting visitors. And the answer is absolutely yes. It's a practice that has to be respected because consumers want to feel respected with their journeys. And so if you do it the wrong way, somebody will opt out and you'll never see them again. So there's a fine line between being aggressive and not being aggressive. And my level of aggressiveness in 24 and 25 is high. I look at the primary competitors that this company has. They are excellent companies with a lot of debt, and a lot of inventory. So it's not really a fair fight, but they are really good at what they do. They have grabbed a lot of market share. I drove by their brand new 127,000 square foot store that they're opening near my house in Chicago. And I held my breath and said, oh my gosh, I'm glad it's not me.
Well, Marcus, this has been great. I know we've kind of run out of time. Thanks so much for your vision and your execution, I hope.
You mean you are?
Listen,
proof's in the pudding, huh?
Proof's in the pudding, Gordy.
And before you say goodbye, I'll make sure I say, you just need to trust the process. That's all. We'll be fine.
I trust the process, and I'm more optimistic than you are on the blockchain assets. We'll see them.
Good. I'm right there with you. Thank you, buddy. Be good.
Be well. Bye. Thank you.
Take care. Revolutionize.